All you need to understand the market today in a nutshell. This is Market Today by N3WS.
Hey everyone, and welcome back for another deep dive into the latest market movers. Today we're covering a lot of ground, from Chinese stocks, believe it or not, to the future as how you stream your favorite shows.
It's all connected, you see. What happens in one corner of the financial world can ripple out and have a real impact on your wallet, even if it seems totally unrelated at first glance. That's what we're going to untangle today.
Love it. Okay, so let's kick things off with, well, a bang, I guess you could say. China just announced this massive stimulus package. We're talking the largest since the pandemic, billions and billions of dollars being pumped into their economy. And the market, well, it kind of went a little wild. Hong Kong's Hang Seng Index, that shot up over 4%, and the CSI 300, which for those who don't know, that's another key index there that jumped up 4.3%. So big moves right out the gate.
Right, but got to remember, a stimulus package this big, it's like turning an ocean liner around. Right. Takes time. So this market excitement we're seeing, it's just the initial reaction, not necessarily the whole story.
So no overnight miracles for China's economy.
Not quite. More like a slow burn. Now, one place we might see things heat up a bit faster is commodities. China's construction industry, huge consumer of raw materials, copper, iron, ore, all that. This stimulus could really shake things up in those markets.
Interesting. So investors who are into commodities, they should be keeping a close eye on China right now.
Absolutely. Now, Goldman Sachs, they're saying this move by China will probably give the stock market a bit of a boost, at least in the short term. Longer term, they're a bit more cautious. Worried about China's property market, which, let's be honest, it's been struggling for a while now.
Okay, so should we be breaking out the champagne and celebrating, or maybe tapping the brakes a bit on our investment plans?
$1,000,000 question, right? It all depends, really. How much risk are you comfortable with? What's your overall investment strategy look like? Got to factor all that in.
Makes sense.
Okay, so from one market mover to another, Tesla. Word on the street is they're about to have their best quarter ever, in China at least. And what's wild is this is happening while their sales in the US and Europe, it's actually kind of gone the other way, kind of weakening. Shows you just how important the global market is for companies like Tesla, right? They're not just playing in one sandbox anymore. Their success, it depends on understanding and navigating all these different markets, each with their own quirks. And China right now, well, with their big push for economic growth, potentially lower interest rates on the horizon, that could be a really sweet spot for car manufacturers, especially Tesla.
Yeah, and you can't forget Tesla's stock has been on a bit of a tear lately, up like 33% since August. Whether that keeps going, well, everyone's wondering, especially with that whole robo-taxi event they've got coming up. Speaking of things that are making waves, how about this whole streaming thing? Remember Netflix cracking down on password sharing? Now Disney Plus is jumping on that bandwagon. They're rolling out their plan to stop all that account sharing as we speak. And it's not just Disney Plus, is it? Feels like every streaming service out there, Hulu, Peacock, Max, they're all either jacking up prices or tightening the belt on those shared accounts.
It's a gamble, though, isn't it? Cracking down, sure, might get a few more people to sign up in the short term, but could also backfire. People are already feeling overwhelmed with all these subscriptions. Might just say, enough is enough. Yeah. There's even data showing that cancellations for streaming services, it's actually going up. People are being pickier about where they spend their entertainment bucks. Can't blame them, really.
It really makes you wonder if this whole raise prices, limit sharing strategy, is that really going to work out for these streaming giants in the long run? Or will it push people to find other ways to get their entertainment fix? All right, from the digital world to, well, the very real world of bricks and mortar, the housing market. Things might seem great at first glance. Mortgage applications, they're booming, 2-year highs. But like everything in finance, it's not always as simple as it seems.
You got it. Look under the hood and you'll see all those applications. They're not from eager home buyers. Not really. It's refinancing that's driving that surge. Interest rates diffed recently. That's got people scrambling to take advantage.
Right, lower interest rates. Sounds fantastic if you've got a mortgage, but let's not forget, there are still some big roadblocks in the housing market. Inventory's still super tight, and prices, well, they're still up there, right?
Yeah, and here's the thing about interest rates. There's a real psychological factor at play. You get those rates dipping below that 6% mark, suddenly it's like a starting gun. More buyers come out of the woodwork, even some sellers too.
Which of course means more competition for those few houses that are actually available. This market, what a ride.
Tell me about it. Trying to predict where it goes next. It's like trying to catch lightning in a bottle.
It's fascinating how news like this reminds us that finance isn't just about numbers, it's about psychology too. A sheet in interest rates can be a major motivator for folks.
Absolutely. It's a reminder that even in the age of algorithms and artificial intelligence, human behavior still drives the markets.
Speaking of artificial intelligence, did you see that industry report predicting a massive surge in investment for AI data centers?
I did. And one company in particular stands to benefit significantly, Nvidia. They're the leading supplier of the specialized chips that power these AI systems.
So this report is basically forecasting a potential gold rush for Nvidia.
That's one way to put it. The report, which was put together by Bain, suggests this is just the tip of the iceberg. They're predicting that the cost of building and operating these data centers could increase tenfold in the next 5 years.
Tenfold. Wow, we're talking serious money here.
We are. And Nvidia is in a prime position to capitalize on this surge in demand. They're projecting a whopping $10 billion in revenue next year, just from governments investing in their own AI infrastructure. To put that in perspective, last year that figure was 0.
That's a staggering jump. But let's step back for a moment and talk about the bigger picture. What does this massive investment in AI actually mean for everyday people?
That's the million-dollar question, isn't it?
Well,
We're still in the very early stages of the AI revolution. Some experts are even comparing it to the dawn of the internet. We know AI has the potential to be a game changer, but how it will impact our lives in the long run is still unfolding.
it feels like we're on the cusp of something huge, but we can't quite see what it is yet.
Exactly. Now, while we're on the topic of Nvidia, their CEO, Jensen Huang, has been in the news recently for selling a large chunk of his shares. Some people might see that as a red flag, but there's more to the story.
Oh, fill us in.
It turns out this was part of a prearranged plan, not a sudden sell-off that might indicate a lack of confidence in the company. Plus, even after selling over $700 million worth of stock, he's still Nvidia's largest shareholder.
So, more of a strategic financial move than anything else.
That seems to be the case. And it's worth pointing out that despite this recent dip, Nvidia stock is still up an impressive 150% since the beginning of the year.
That's a good reminder that in the stock market, things can change quickly, but past performance doesn't always predict the future.
Precisely. Speaking of change, another interesting development is brewing in the world of cloud computing. Google has decided to challenge Microsoft's dominance in this arena, and they're not mincing words.
Oh yes, the battle for the cloud just got a whole lot more interesting. Google's claiming that Microsoft's licensing practices are anti-competitive and designed to lock customers into using their Azure cloud platform.
What I find particularly compelling is Google's argument that Microsoft's dominance actually poses a security risk for everyone. They point to that major tech outage we saw back in July, which was triggered by a faulty software update from a company called CrowdStrike. Google's point is that relying too heavily on a single provider can have far-reaching consequences.
It's a bit like putting all your eggs in one basket, isn't it? If that basket falls, you're in trouble.
Exactly. It highlights the importance of diversification, even in the digital world.
Now, before we move on, I want to circle back to something you mentioned earlier, the idea that we're in the early stages of an AI revolution. It's exciting and a little bit daunting at the same time. What are your thoughts on that?
Well, I think it's important to remember that every technological revolution comes with its own set of challenges and opportunities.
It's like we're looking through a foggy window, right? We can kind of see the outlines of what AI might become, but the details are still fuzzy.
Yeah, and that's natural. Every technological shift, it comes with some uncertainty.
Yeah.
But history shows us these periods of change, they can be incredibly powerful. Think about the internet. We went from, dial-up modems to, everything we do online now, just a couple of decades.
Yeah.
AI, it has that same potential to reshape our world. Whether it's for better or worse, that's the big question, isn't it?
It's exciting and a little bit scary all at the same time. But I guess that's progress for you, right? Never a dull moment.
Never a dull moment, exactly. But before we get too lost in the what-ifs of the future, let's bring it back to the here and now. We covered a lot of ground today. China's stimulus plan, the battle for cloud computing dominance.
We even touched on the future of streaming and that age-old question, will interest rates ever stop their wild ride?
And let's not forget, Tesla's success story in China, proving just how vital the global market has become, no matter what business you're in.
It's a lot to process, but hey, that's what we're here for, right? We take these complex financial stories, break them down so they make sense, and most importantly, so you can see how they might affect your own life.
Because ultimately that's what matters, isn't it? Whether it's the stock market doing its thing or the rise of AI, it all boils down to how these global events might trickle down and impact your own financial well-being.
Couldn't agree more. We want you to feel empowered, informed, ready to make smart decisions with your money, especially in a world that's constantly throwing curveballs. So as you go about your week, think about the things we talked about today. Maybe you're reconsidering your investments after hearing about China's big move. Or perhaps you're thinking twice about that streaming service subscription now that prices are going through the roof.
Or maybe you're wondering, is now the right time to dive into the housing market? Or should I refinance my mortgage with these interest rates? Big decisions.
Whatever financial crossroads you find yourself at, we hope this deep dive has given you some food for thought, some things to mull over as you navigate your own financial journey. And remember, the financial world never stands still. So stay curious, stay informed, and stay engaged. It's the best way to stay ahead of the curve and make your money work for you.
Well said. And never forget, your financial journey is your own. The best decisions are the ones that align with your personal goals, your risk tolerance, and your vision for the future.
Couldn't have said it better myself. Thanks for joining us on this deep dive into the world of finance. Until next time, stay informed, and we'll see you back here soon.